Good morning. Hope you had a great weekend. If you like what I do, please subscribe. This information contains forward-looking statements. It is not investment advice. Investing involves risks. It's your responsibility to prudently use this information. We are not responsible for your gains or losses or for your setting up of an investment strategy or your asset allocation. Today we're going to go through the FAANG index. New York FAANG index has broken trend. The 200-day moving average is here in light gray. And the basic rule of thumb is 3 periods below or above a trend is a breakout. So here we have a breakout to the downside. Apple Computer. Apple Computer looks very good. It's in a bull trend. It is reasonably valued in the opinion of many investors. And here we have the longer term trends intact, although it has broken the short term to intermediate trends of the 20 and 50-day moving averages. Now, something to pay attention to is that these stocks are in pretty much every growth fund and all the index ETFs, and selling in those complexes could simply drive the price down, no matter what you think of how well the company is managed or its valuation. Amazon, a significant break in trend. Here we have potential downside if we go back to from the previous breakout here in 2020. Feb 2020 we had a breakout, and if we retrace, and we're going to look at an 80% to a 55% loss, depending upon how you look at it. But definite break in trend. Facebook has broken trend as well. Now Facebook consolidated, and here the orange line basically signifies what could have been a potential breakout. And the stock did break out on a short-term basis, retraced. Now there's a lot of reasons why Facebook is under pressure, but overall anything close to having a high valuation or any sort of suspicion regarding the future in the bubble complex, which are the highly valued tech stocks, bubble stocks, meme stocks, however you want to phrase it, are taking heat. Google, surprisingly, has broken trend. We owned this for a long time. Got stopped out here around 26.50. And the fact of the matter is this could be one of the most reasonably valued blue chip tech stocks in the country, and it's facing some significant pressure. Now, we don't know. This is an unconfirmed breakout to the downside because it closed below the 200-day moving average. Keep in mind that bull or bear markets have some of the biggest rallies statistically, and you could easily have a rally back up into the 27.85 range, and it would have to break above these, the 50 and the 20-day moving averages in order to quote-unquote regain trend. Microsoft, awesome company, very well run, breaking down on a short to intermediate term basis. It could hold support and regain trend, but given the environment, this would definitely be something to watch, and depending upon your risk tolerance, you really want to have stops at these levels. You can see how the stock bounced on the 50-day moving average, broke it, and it consolidated here on the 150-day moving average and then broke. So we'll see what happens with Microsoft, but it's definitely on the watch list. Netflix is the worst of the FAANG complex. Broke down to 397 on Friday on significant volume. This is not healthy at all. It doesn't help the overall effort for the NASDAQ or the NASDAQ 100 to regain trend. Here we have a lot of volume at the 500 level, and it broke through that volume. So you have a lot of people here who bought it who now have losses, who might get cold feet. Nobody knows what's going to happen. but when a stock like this breaks trend to such an extent, it's an extremely negative development. Take care.